Hello friends, I am Joy and today we will be discussing about the government's decision to initiate the initial public offer in case of LIC. So we will be discussing what is IPO or initial public offer. We will see what are the features of an initial public offer. Then we will be discussing about the IPO or the initial public offer of LIC, what is the plan of the government. Then we will also see what is the background at which the initial public offers are issued in case of LIC. We will be analyzing this. We will see what are the merits of this decision. We will also see what are the issues related to this decision. Now, this is a very important topic with regard to your mains examination, and IPO initial public offer and certain concepts related to it, it's very important for your prelims examination as well. Now, if you have seen the pattern of questions asked by UPSC in the mains examination, especially in the year 2019, the questions were direct and also analytical in nature. For example, UPSC asked a question about GST, the analysis of GST on Indian economy, or the impact of GST on Indian economy, how it has affected the financial position of central government and state government. So this was the first question in your GS paper 3 in the previous year. Now, likewise, initial public offer of LIC or such related important decisions taken by the government and its impact could be asked in your mains examination. So from that perspective, we will be covering this topic in detail. Now let's come to the topic. Let's come to the current affair first. Central government has started the process to launch initial public offer, that is IPO of the LIC. Now, LIC is fully owned by the government. So, it's a PSU, public sector undertaking. It's fully owned by the government, which means the 100% of the shares of LIC is held by the government. It was set up in 1956. So, we have to understand what is an IPO, what is an initial public offer. We also need to understand what is the plan of the government. So, LIC is a PSU, public sector undertaking, fully owned by government, which means 100% of the shares of LIC are held by the government, and it has the biggest share in India's insurance business. So, LIC has a major stake or a major share in insurance business in India. Now, first we will understand what is an IPO, what is an initial public offer. IPO means selling of securities to the public in the primary market. Now, here the term primary market is very important. Why? Because primary market is different from that of secondary market. Now, what is a primary market? Primary market is a market which deals with new securities, which means the securities that are issued for the very first time. So, primary market deals with securities that are issued for the very first time. Therefore, primary market is also called a new issues market. Now, let's come to the definition of an IPO or an initial public offer. So, we have seen that initial public offer means selling of securities to the public in the primary market, which means that initial public offer of a company means a company is selling or issuing the shares for the very first time. So, when a company issues its shares for the very first time, it is called an initial public offer, and the initial public offer is made on a primary market. Primary market is a market which deals with the sale of securities or issue of securities for the very first time. That is why it is also called a new issues market. Now, how is a primary market different from that of a secondary market? So, primary market is different from a secondary market. In a secondary market, existing securities are bought and sold. So, secondary market is a market where existing securities, that means the securities that are already issued. So, already issued or existing securities are bought and sold. It is called a stock market or a stock exchange. I hope you got the difference between primary market and secondary market. Primary market is where the shares are issued or sold for the very first time. Secondary market where the already issued shares are sold. So, IPO or initial public offer means the shares of a company which are issued for the very first time. That is why it is called a initial public offer. From the name itself, it is clear. Initial, the first time. Public means issued to the public. Public offer. So, offered to the public for the very first time. So, this is a initial public offer. Under IPO, an unlisted company makes either a fresh issue of securities or an offer for sale of its existing securities or both for the very first time to the public. So unlisted company. What is an unlisted company? A company which is not listed on a stock exchange. When does a company gets listed on a stock exchange? When it is issuing or when it is dealing with shares, selling the shares in the stock market, that is in the secondary market. So when a company is selling its shares in the secondary market or trading its shares in the secondary market, then it gets listed on a stock exchange. So under an IPO, under initial public offer, an unlisted company makes either a fresh issue of securities or an offer of sale for its existing securities or both for the very first time to the public. And through an IPO, an unlisted company can get listed on a stock exchange. So by making the initial public offer, an unlisted company, which is a company that is not listed on a stock exchange. So a company that is not listed on a stock exchange, by issuing the public offer, initial public offer, can get listed on a stock exchange or the secondary market. It is generally used by new and medium-sized firms that are looking for funds to grow and expand their business. So new firms and medium-sized firms who are looking to expand their business and who need capital to expand their business will generally make the IPO, initial public offering. Now coming to the IPO, LIC IPO. The initial public offer or the IPO of the LIC is expected to be the biggest in the Indian capital market. We have seen that usually the IPO, initial public offering, is made by medium-sized companies and new companies to get more capital to expand their business. But LIC, in case of the IPO, initial public offer of LIC, it is expected to be the biggest in the Indian capital market because of the size of LIC and the scale, that is volume of transactions of LIC. The LIC's total assets, it has touched an all-time high of 31.11 lakh crore rupees in 2018-19. So this is the asset base of LIC, and considering the size and the asset base of LIC, it is expected that the IPO, initial public offer of LIC, is going to be the biggest in the Indian capital market. And the government is seeking some exemption related to LIC IPO from the SEBI, which means the government is asking the regulator of stock market is the SEBI, Securities and Exchange Board of India. So government is asking or seeking for some exception related to the initial public offer of the LIC. Now let's come to the background. How did this idea of IPO or selling of shares of LIC in the primary market and then subsequently in the secondary market? So how did this come up? In the budget 2020-21, the government had announced plans for IPO of LIC and a proposal to sell the government's equity in the stressed IDBI bank to private, retail and institutional investors through the stock exchange. So it was actually in the budget proposals of 2020-21 financial year that the LIC's shares will be sold to the public through IPO, initial public offer, and also government is planning to sell the equity shares of the IDBI bank. Now, why we have brought this IDBI here? It's because LIC is a majority stakeholder or a shareholder in the IDBI bank. So this was the budget proposal of the government. The government expects to raise 90,000 crore rupees through stake sale of LIC and IDBI and another 1.2 lakh crore through another other disinvestments. Other disinvestments here refers to the disinvestments of other PSUs. So selling of the shares of other PSUs. Selling shares of other government undertakings. So government is expecting to raise 90,000 crore rupees through selling the shares of LIC and IDBI and another 1.2 lakh crore rupees through other disinvestments of other PSUs. Earlier in 2017, the government had listed the shares of General Insurance Corporation and New India Assurance through IPOs. So these are the previous examples where the government listed means listing on a stock exchange, listed the shares of GIC, General Insurance Corporation, and NIA, which is the New India Assurance. So this was also done through IPOs, through initial public offers. So this was in 2017. So these are the previous examples. If questions are asked on LIC's IPO, issue of IPO, you can mention about the previous examples also where the government has done similar with the other insurance companies. Now let's see what are the benefits of this decision. First, it will help the government in meeting the rising fiscal deficit. Now what is fiscal deficit? Fiscal deficit is the excess of expenditure of the government over the income of the government. So this is called fiscal deficit. Now how this will help in meeting the rising fiscal deficit? Because for the government, the expenditure on one side is, whereas the income on the other side is decreasing, especially on the backdrop of COVID-19, and even before the outbreak of COVID-19, the economy was going through a slowdown. So government expenditure increasing on one side and income decreasing, especially the tax income. So this has led to rising of fiscal deficit. Now we have seen that through IPOs, initial public offers, government is selling the shares. So government is selling the shares of the LIC. So LIC is fully owned by government. So by selling the shares of LIC, the government will be able to raise some capital, and this can be used in meeting the fiscal deficit to a certain extent. Again, the rating agency S&P has estimated India's or Indian governments, both combined of central government and the state government, fiscal deficit to rise 11% of GDP in financial year 21 from the previous 7.8%. So in the financial year 20, the fiscal deficit of the center plus states combined is 7.8, whereas it is expected that it will rise to 11% of our GDP in 2021 financial year. Why? Because especially due to the outbreak of COVID-19, what has happened? The government expenditure has increased, and the subsequent lockdown imposed due to the outbreak of COVID-19, it has affected the economic activities. So economic activities are affected, and therefore what has happened? The income levels have come down. So income came down, whereas the expenditure increased. So this has widened the fiscal deficit. So fiscal deficit is again expected to rise, and this sale of shares of LIC through the IPO will help the government in meeting the fiscal deficit. Second one, it will also give an opportunity for the retail investors to participate in the wealth creation of LIC. So retail investors, individual investors who wants to make investment in LIC, which is a profit making company of the government of India, they will have an opportunity to make an investment in the wealth creation of LIC. And also an IPO will bring transparency into the affairs of LIC. So as we said, by issuing the initial public offer, what happens? The LIC will get listed on the stock exchange, and becoming a listed company, the transparency of the affairs or the transactions regarding, especially regarding its wealth, its transactions, its income, etc. will become transparent. By becoming a listed company, LIC will have to inform its value and other market related developments on time to the stock exchanges. So according to SEBI regulations, stock exchanges regulator is SEBI, Securities and Exchange Board of India. According to the regulations of SEBI, the company which is a listed company will have to inform about the value and other market related developments on time to the stock exchanges. So transparency will increase. Listing of companies on stock exchanges disciplines the company since it comes under greater scrutiny. Scrutiny means regulation. So it will bring in little more discipline to the affairs of the company. So it will come under the regulation of SEBI, therefore more discipline. It will also provide access to financial markets, thus raising the company's value. So by becoming a listed company, it will provide access to financial markets for the company. The company will have now access to the financial markets, and therefore the value of the company will rise. Now what is the issue in that? LIC is dealing with huge non-performing assets now. So NPA, the NPA in the LIC is on rise. Therefore, the issue is that with recent NPAs or with high NPAs, it may not attract investors. as in case of Air India what has happened. But we cannot compare LIC and Air India for sure, but I was just giving you an example. So if a company has huge NPAs, then this may not attract the investors. So this is the issue in it. You can download the PDF of this lecture from my Telegram channel Joy Official. You can get in touch with me on my Facebook page or on my Instagram page. You can also write to me at joyc.studyiq@gmail.com for any of your queries and clarifications. Thank you.